You're always more positive than I am. Indeed, the angel of death has a more positive outlook than I do. Throw me a line and pull me back from the brink.
Well, obviously, interest rates went up sharply last week. The Bank of England raised interest rates for the 13th time in a row from 4.5% to 5%. And for a lot of people who fixed their mortgage 5 years, 3 years, 2 years ago, fixed rate deals, those fixed rates are now expiring and they're having to remortgage at much, much higher interest rates. They may have mortgaged at 1 or 2%. They're having to remortgage at 6 or 7%, which can lead to thousands more pounds extra in mortgage payments each year. For the average homeowning family, that's a pretty stiff increase in their outgoings. But to throw you a line that's more positive, this isn't 2008, Neil. This isn't the foothills of a global financial crisis. I don't think we're going to see a sort of systemic meltdown in financial markets anytime soon. But having said that, for some families who are remortgaging, and they'll generally be younger families in their 30s and their 40s, single people too, who have bought homes in good faith. They've ended up buying homes that have been very expensive because there's such a shortage of homes in this country, something I've written about a lot over the years. They will feel a lot of mortgage pain in the months and years to come. And for my money, that's going to blow back directly to this Conservative government, because whenever the economy goes wrong, it's the incumbent government that gets the blame.
Liam, do you foresee mass repossessions of homes? I mean, are we looking into a future where thousands of people, or more, or an order of magnitude more, lose their homes?
You know, I always learn a lot from your monologues, Neil, as I'm sure lots of GB News viewers and listeners do as well, and that's why we tune in. The history of Mrs. Barber in Glasgow, where people power tried to stop evictions. You know, this is the first mortgage crisis that we've had in the age of social media. And I think if people are going to be evicted, if mortgage companies are doing repossessions, their neighbours and their friends are going to film those evictions, and they're going to get on social media, and the mortgage companies involved, which are often big banks and building societies, are going to get an awful lot of negative press. So I do think one of the good things about social media is that it'll make it harder to evict people. And anyway, I think in the vast, vast majority of cases, we're not going to get to that point. And indeed, I spent most of yesterday standing outside Downing Street while a mortgage summit was going on between Chancellor Jeremy Hunt and some of the big mortgage lenders, HSBC, Santander, Lloyds, Virgin, and all the rest of them. And they seem to have come up with some kind of deal whereby the mortgage lenders have promised, it's not a law, but they've pledged publicly that they will allow families, households that are in mortgage difficulties to extend the terms of their loan, to maybe shift from a repayment mortgage to an interest-only mortgage, maybe take repayment holidays as well. Crucially, Neil, without that affecting their future credit rating. So without that meaning that they'll have to pay more for their credit in the future once the immediate crisis is over. Now, if the banks deliver on that, if they deliver on that pledge, then I think we can keep repossessions to a minimum. And anyway, this is a spike in interest rates. This is a spike in inflation. But to throw you another positive line, seeing as it's the weekend, I do think, inflation's stubbornly high in the UK. It's currently more than double what it is in the US. It's 8.7% still in the UK. The May figure, which came out last week, was the same as the April figure. And that's really led to, turmoil on some financial markets. So that's higher by a factor of 2 than the US. But I do think inflation is going to start to come down quite soon. I've been saying that for a while, but when it does start to come down, it will come down quickly. So it may be that this spike in interest rates, this spike in mortgage payments is pretty temporary.
Liam, but I can sense Tonya Buxton beside me here with something to say based on what you've been saying so far.
They're going to get some help for people with homes, their mortgages, but these interest rates are killing business. And there's no lifeline. There's nothing being thrown to businesses. What do you think they're going to do about that? Because businesses are shutting down left, right and centre because they can't afford the interest rates.
I think that's exactly right. You know, too often on media, we don't do enough on economics and business anyway, but we tend to ignore those small and medium-sized enterprises that are the lifeblood of our economy. They employ over half of us. They generate over half of our national income. They're over half of the economy, and many of them are suffering. Businesses tend, though, to have much longer-term loans than households. Businesses are often in quite a powerful position to negotiate. But you're right. It's not as if there's going to be much help for businesses. But look, they're not giving direct help to families, Tonya. Not even the Labour Party wants to sort of help people pay their own mortgages, because for many people renting, that will look like middle-class welfare. And, you know, homeowners, even though they may have a crash crunch, they're generally a lot better off than a lot of the rest of the population.
Liam, can I just jump in? When you watch this, you've been watching this your sort of professional life, you've been watching this. Don't you just despair when you look at people who are supposed to be competent? Don't you just despair and begin to wonder if it's not incompetence, but choreographed impoverishment of a class?
So what's got us into this mess in the first place, at the heart of this crisis, is a fundamental lack of housing in this country. We haven't built nearly enough homes, either to rent or to buy or for social housing. And for that reason, the people who are dealing with 6, 7, 8% plus interest rates on their home loans now are in a much worse position than a lot of people who were dealing with 15, 16, 17% interest rates back in the 80s and the early 90s. I get so many emails. I'm stopped on the street so often by people who, with all respect, are sort of 60, 65, and they say, well, the kids of today, they don't know they were born. We had 15% interest rates and we just saved more, and we didn't go on holiday, and we didn't eat avocado sandwiches like today's youngsters. If they reined in their horns and saved, they wouldn't be in any difficulties and they can buy homes. That's not how it is, Neil, because today's youngsters, they had to buy homes at a much, much higher cost, a much, much higher multiple of their average income than when I first bought a property in the 90s, or when some GB News viewers first bought properties in the 80s. So today's youngsters are paying more interest cost at 6 or 7% interest than people 20 years ago, 30 years ago were paying at 15%. So that's the fundamental problem. The lack of homes, which means a lot of people have got very indebted at 2 or 3% interest. So at 5, 6, 7, 8% interest, they're really going to feel the squeeze. And then on top of that, the kind of the tsunami of incompetence has really been, and it gives me no pleasure to say this, from the Bank of England. I was writing in my Telegraph column in late 2020, early 2021, when inflation was 1%. There is an inflation surge coming, because when we come out of lockdown, you're going to have a wall of demand, and you're going to have an economy that has been shuttered and held back. It will struggle to get back into gear. And the Bank of England kept saying, don't worry, old boy, inflation's transitory. We don't need to raise interest rates. It's fine. They were far too late to get going. And then when they did start raising interest rates, Neil, they were far too timid. And that's why, because the Bank of England was slow out of the blocks, these interest rate rises that we got now to try and get our arms around this inflation problem are much higher, and they will stay higher for longer, imposing more pain on mortgage holders, on businesses, as Tonya says, on the broader economy than would otherwise have been the case. I don't think it's coordinated, malicious gerrymandering of the economy. I just think it's straightforward hubris, arrogance, incompetence, and a lack of willingness to listen to, clever outside voices, people who don't go with the consensus all the time. We need out-of-the-box thinkers on that Monetary Policy Committee on the Bank of England. We need less groupthink.
Liam, going to have to jump in. Just